What is up, everyone? Nick here. Welcome to the show. If you're new, thanks for coming back. If you're not, if you've watched my show before, you will know just how bullish I am on innovative disruptors, companies transforming the landscape and positioning themselves for the future technology-heavy world. The NASDAQ-listed company of today's episode is no exception by embracing the decentralization of workplaces and the gain of remote work. As our world becomes increasingly quantized, the collection and storage of this compiling data becomes an absolute necessity. Buckle up, everyone. This one's going to be a fun one. Before we get to it today, make sure to always come to your own conclusions whenever allocating capital on the stock market. Penny stocks, although they do come with more potential reward, this is also paired with increased risk. Disclaimer, this is a sponsored video. Do your own due diligence, formulate your own opinions. That is your duty as a smart and calculated investor. All right, ladies and gents, let's get right into it. So here's what I'm going to do. I'm first going to go over who the company is, what it is exactly they do. I'm then going to go over where they see themselves moving in the coming quarters. And then lastly, I'll be covering their analytics, balance sheet, statistics, and charting. Okay, so the company of today's episode is called Sphere 3D Corporation, based in Ontario, Canada, trading on the NASDAQ under ticker symbol ANY or ANY. But this isn't just any old stock. Sorry for the pun. They are trading up a decent 18.52% in just the past year, beating out the S&P. However, many analysts believe that this company and industry is about to explode in valuation, something we'll touch on shortly. So what is and who is Sphere 3D? They are a company focused on cloud computing. We have seen the massive and abrupt rise in cloud computing, with the industry giants like Microsoft, Google, and Amazon investing millions into their cloud potential. We don't see cloud computing slowing, but rather exponentially increasing in pace, making it an ideal time to be within the arena. This shift, catalyzed by the recent global health situation, forcing companies to quickly adapt amidst the changing times, has made cloud computing companies extremely lucrative. Technavio suggests that the cloud market could be worth up to $287 billion by the year 2025 alone. The industry is really just taking off, and as more and more industries move online, the need for cloud computing will only escalate. Now, what Sphere 3D does exactly is quite unique. They are extremely tech-heavy and often use technical terms. I had to do quite a bit of research to get a grasp understanding, but I'll talk in layman's terms to explain their niche. So on an overview, they operate a portfolio of brands, all working together to help their customers achieve their basic IT needs. They essentially deliver the in-demand services of data management solutions, virtualization, and on-premise solutions. And they do this through their hybrid cloud. Now, to achieve all this, they do have a strong portfolio of different brands to aid their customers directly. They are focusing on innovating new technologies to then facilitate cutting-edge speed and performance, really setting them apart from their competitors. Now, I want to look at their Glassware 2.0 tech and why I think this will be revolutionary for the company. Sphere 3D's G Series is actual hardware and is the first of their Microsoft Windows, we all know them, based product line. This technology can deliver any Windows desktop app to any single device. And just think about how potentially lucrative this is when considering just how many massive corporations are moving to decentralized workplaces. Their Glassware 2.0 microvisor is able to gain Windows apps to share one set of OS components, which leads to increased efficiencies and total cost of ownership savings. Glassware OS kernel is also less vulnerable to viruses, and this is hugely important. And this is simply because it has a smaller OS footprint than a full desktop. So the typical attacked areas by viruses just simply do not exist. Now, their solutions to IT-focused problems are quite widespread. They are focused on many different industries currently, on call centers, healthcare, education, and telecommunications to then leverage their public cloud resources. Now, what I love about this company and their future potential success is they are harnessing the movement into the remote workspaces. Now, because they do offer premise solutions creating private clouds and links to public clouds, this provides the work from anywhere solutions many companies are currently looking for. Cloud computing has become essential in our everyday lives, and companies at the forefront of this change are poised to succeed. Now, Sphere 3D is extremely focused on security for their clients. This is something that is becoming increasingly important as we shift online, and internet security itself continues to be compromised. One of the companies within their portfolio is Overland Tandberg, and this is where they are focused. They are securely managing and protecting companies' digital assets, a very in-demand industry. This branch is changing with the times. They are now entering arenas like artificial intelligence and cryptocurrency protection. Their system works and services in over 90 countries and has been for 39 years, and in my opinion is a really strong asset to Sphere 3D's portfolio. Now, moving into their analytics, we have recently seen a huge pullback from the tech sector wide over the past few months. When the health situation first arose, many tech companies surged in value. However, as the recovery period is now taking place, much of this investor capital has outflowed, causing a substantial sell-off. Now, many analysts believe that this marks an ideal time and a much more enticing entry point for exciting tech companies once again for the long-term success. The company is currently sitting at $1.60 USD, and in the past 6 months is up 18.52%. They have a massive 52-week delta with a high of $5.55 and a low of $1.23. So they are showing some upwards possibility. They are a nanocap company with a market cap of $18.85 million. They generated $4.85 million in the trailing 12 months, and they have an extremely small float of only 4.87 million shares. So when good news is announced, shares will typically surge. However, the same should be noted of the opposite. Now, whenever looking at a company, I like to take a deep dive into their management team. Peter Tassiopoulos is the company's CEO and chairman. He has served as the company's president and vice chairman previously, so he does have in-depth knowledge of the inner workings. He has served as directors and senior executives of multiple different companies and has ample experience within the field. Vivekanand Mahadevan is the company's director. He has over 25 years experience in senior level strategic planning and marketing experience. He was previously CSO at NetApp and has served as vice president of marketing for LSI Corp. Dr. Shimin Bolin is also a director. She is currently president and CEO of Paradis Partners, a consulting services firm to increase shareholder value. Duncan McEwen, director, serves as president of Diligent, a consulting company founded in 1991, specializing in strategic advice for tech-based clients. So a very diverse and thorough team here. At these much lower valuations at this point, I really do think this is a very interesting company to take a look at. I do think tech market-wide will again once see investor interest and buying pressure take over this recent slide. We do know that the world is shifting online and many employees of huge corporations are moving to remote work, and I do not think this will return once the world continues to open up. Companies have seen just how lucrative and the potential savings from the decentralization of the workplace, and in my opinion, this is here to stick for the long run. Anyways, everyone, make sure to always come to your own conclusions whenever allocating capital on the stock market. Do not invest any capital that you cannot afford to lose. I'm not a financial advisor, and it's important that you come to your own conclusions. Remember that penny stocks do have more potential reward. However, this is typically paired with increased risk. Do your own due diligence, formulate your own opinions, and come to your own conclusions. Anyways, everyone, I'll see you all in the next video. Take care, happy trading, cheers.